Today, my question is, can passive investors become active? This question taking center stage after Bloomberg reported that the state pension plan for Florida teachers owned over 40,000 shares of the company that made the gun used in the February 14th school shooting. So who better to discuss this with than Linda Zhang, CEO and founder of Purview Investments, a firm specializing in ETF managed solutions and ETF product innovation. Linda has a quite impressive resume and used to work at such firms as BlackRock and MFS. Puts me on a totally different page. Linda, great to talk to you.
Thank you for having me, Alex.
So I wanted to start with that news about the Florida pension fund. Are we going to be in an environment where we're going to have people call their 401k guys and say, look, I want to know what's in all these ETFs, and then make different decisions?
I think this is just a matter of time when it's going to come in big waves. ESG-related investing actually has a very long history. According to ESG working group, a trade group, the ESG-related investment already exceeded $8 trillion as of 2016. And ESG in ETF is relatively young, but that doesn't mean there is no demand. So I wouldn't be surprised if institutional asset owners and retail investors, especially millennials, are going to drive the demand for ESG-related investing.
And we take a look at a lot of issuance for ESG, and you can see that 2016 was a really hot year, but then it kind of peaked after that. It sounds really good, but the products aren't just there. Like the assets backing it aren't there. When are we going to wind up seeing a real substantial shift in ESG?
That's right. So as I said, ESG investing itself is pretty long, right? But
yeah.
ESG ETFs is relatively young. As a matter of fact, I tracked about over 40 self-labeled ESG ETFs listed in this country. The vast majority of them, over 80% of them, are only 2 years old. So you can imagine, in order for these products to get on the platforms, right? Brokerage platforms, and it's going to take some time.
Do investors need to expect they're going to outperform with ESG, or is it just going to make them feel better?
That's right. I think
both. I don't know.
Exactly. My take on that is actually both. Is actually beyond. You can combine investment goals with ESG principles, and I was a quant by training, so I've studied. There are two ESG ETFs in this country that have over 10 years history. So I compare there with broad market performance. And in quant's term, the performance is so close, and there we call it statistically indistinguishable, which means you actually don't have to sacrifice performance to feel good.
Well, and you just mentioned sort of the history and your history as well. Where are we in the ETF versus mutual fund structure? I mean, you kind of grew up in that world, transitioned then to ETF. So can you walk us through where we are in that transition?
Absolutely. I started managing a mutual fund many years ago, since 2003, with BlackRock and with MFS. And, mutual fund today, it still holds vast majority of investment products. It's probably around $13 trillion versus ETFs about $3 trillion. But I really see the growth is just happening very, very quickly, because think about ETF. What it is a structure, it's a vehicle. Right? Just like mutual fund, it's actually 40 Act funds, but it's a better vehicle. It's almost like the Tesla in the auto industry, right? So I wouldn't be surprised that we're going to continue to see shift movements of assets from mutual funds into ETFs. And people are saying, does that mean passive is going to take over the world? And so wait a minute. ETF, remember, it's a vehicle. It can hold both passive contents as well as active contents. I'm very happy to see there are more and more active ETFs coming to marketplace.